StockMinter.com studios here in the beautiful Black Hills of South Dakota. I'm your StockMinter, Brian Johnson. Wow, what a change a couple days make. You can see the consolidation I talked about. Big pushes to the downside, then up, then back down. Now today, right back up again. Breaking out of the consolidation, kind of the triangle we had been watching for quite a while. And you can see that it led us to some little higher levels. We came right back up to this 12,250-ish area, which was one of my overhead areas for you, and you can see why it was important. Played with it for 1, 2, 3 hours before I touched it, I guess, back here. So 3 or 4 hours before it finally broke through, only to do what? Come back and retest it. Now, this is all good so far for the bulls. Internals were good. By the end of the day, the internals had even changed a little bit more and showed actually more confirmation of the bullish move today. So we can see that maybe the bulls are set for a little bit more too coming into the end of the week. Certainly wouldn't surprise me. Okay, I've been very neutral on the markets. I am still more neutral than anything on the markets, but with that break today, there could be some now more potential to the upside, seeing what we have here. So good breaks here by the bulls, moves to the upside. Everything looks good. All the indices showing the same type of thing. So we still have some overhead levels here to watch and some things to get up and over, but you can see opportunities are starting to come about for you that are bullish. Dow daily, you can see this move put in here as well. And what are we doing? We're back above the 20. Fighting with this thing quite a bit. Definitely something I mentioned to you guys about a week back that I was looking to see if we'd get a fight in between this line here. We certainly have seen that, certainly have gotten that over the past few days. Just kind of slicing and dicing our way through this 20-day moving average, making it more or less ineffective for the time being. We'll let it resolve itself out, let the markets resolve themselves out, move from there. But you can see us getting back above and holding above now the 20-day moving average again. Lower areas still are down here to be broken for the bears, but now our upper areas are starting to come into play again for the bulls. Starting to see some kind of repeats of some formations we've seen in the past. We'll see if those actually play out. Now the Nasdaq broke their overhead areas much sooner than what we saw on the rest of the markets. It was actually out of its symmetrical triangle by the time the market opened. So I have some extra lines. Well, I guess I don't have them on my daily charts. I put them on my subscribers' charts. But broke that symmetrical triangle today, this morning on the break. And you can see as we got above these levels, we ran right back up into another overhead level, which was 2370. So above the 2360, went back to 2370. Now there's good potential to maybe hit or get close to some of these overhead areas. Looking to see if Friday doesn't finish that way. Are we going to wander? We haven't had a lot of wandering days lately. It's been actually very good if you've been a trader, especially a day trader. There has been opportunities to actually make money in the markets from a day trader's perspective. Very nice to see. During the course of a week, we tend to have a few days that wander sideways, but so far, the only day that has been was yesterday. Otherwise, good trading for the week overall. Nasdaq once again up and over these highs, trying to work its way even a little bit higher. And Yep, holding the 50, reclaiming the 20, just as the rest of them are. So now we're looking at those overhead levels in the Nasdaq to come. Tomorrow closes the weekly. We finish bullish, finish bearish. It's anybody's call. Wait until the end of tomorrow to close, but this is why I wait until the end of the week. You can see these candles can change and usually do very quickly in the course of a week. SPX 60-minute also got up and over its areas, but coming back into some overhead resistance. Actually, I'll show you guys this. Here is an intraday email I sent out to my subscribers. This was sent about 12:07 my time, so that's 2:07 Eastern. Just stating and telling people that the triangles we've been following here have now been broken. Markets are trying to grind their way higher. Nasdaq already has, and the SPX and Dow seem poised to follow to these new highs. Here are the latest 60-minute charts with the overhead resistance areas to watch. Bulls have passed one test. There's another waiting for them at the levels I have on the charts below. If we don't slow down here, watch those overhead levels to stall things if, by chance, we get to them today, and then more in tonight's video. If this is the kind of stuff that'll help you in your trading during the course of a day, a week, whatever. I don't send these out every day, but if this would be something that would help you, try out the newsletter. It's on your right. Uh, Definitely, I think worth the value. Definitely worth the value. So, anyway, this was sent out about 2:07. I was expecting things to maybe kind of slow down a bit. It was shortly after that I think we did right up here and start to turn around. Now we had not, or we're working on some of these overhead levels. We did break those just as we saw in the Nasdaq. So the advice was handy for those that like to day trade. It was very useful because we did end up breaking a new highs after that was all sent out. And actually, I don't have them marked on these charts. I mean, you guys are probably asking, what are those overhead levels? I know, but what good would a value added service be if there wasn't value added to it? So I don't have all of my lines on the daily charts. However, one of my lines that I did have on the subscribers was hit right at the end of the day. So we did have something, at least a target to look at coming into the end. And it did stall things, it held things up, and it was right back here around this 1332-ish area when it did. So we are, if that'll help you, by all means, try it out. It's well worth it. So here we are back at these upper levels on the SPX, looking to maybe push our way higher coming into Friday. Fridays tend to be pretty good to the markets. Got one day of that left, and after a huge push today, you can see the volatility. Big red candle, now big white candle in the opposite direction, still messing around and flirting with the 20-day moving average. Are we doomed to come back and revisit that again tomorrow? I don't know. Seems like it's been the place to hold. I told you guys this would be a big fight right here for the from the Bulls and the Bears side would be the 20, and sure enough, it has not failed to show us that. Nothing but a lot of dogfighting going on over this one little stinking little green line we have drawn in our charts. Gotta watch it over the next few days to see if it gets revisited and, more importantly, reclaimed by the Bears. So into overhead levels, looking for maybe continuous pushes higher coming into tomorrow. VIX down, but yeah, well, it's down. It is back below that 19 area, getting close to this 18.5 area. I'm kind of hoping this thing will try to stay sideways. If you are bearish, that's what you want to see. Hold up here towards the 1920 area would not be a bad move from the VIX. From a weekly, though, you can see us starting to push these lower levels. So, looking for two continuous closes outside of this channel, which we have not seen. We get that. Good. We could have something in the works here from a bear side in the markets. Very important. We'll look to see where this closes tomorrow. Apple 60-minute was way up. I told you this consolidation is usually signifying a larger move to come. We saw it. We saw it today. We'll always want to wait for the move. And that was obviously what we got today. We got the big gap up and then the run straight up all day long. So opportunities to make some money here. Would have had to be a very little cautious at the open to see what was going to happen with price, but once it made its decision, pretty easy to follow the charts all the way up for most of the day. So Apple up 2%, which is $7 trade in Apple. Just a strong little beast here. And you can see getting into some overhead levels. Now, 360 is an overhead level, something you definitely want to keep your eye on. Breaks above that could definitely take us back up towards and close to maybe that 365 area. I'd start to maybe be cautious around 362, 363, but definitely probably worth your time if you can get this thing to kind of sneak its way up and through there. To the upside. To the downside now, watch to see if the 20-day gets reclaimed on Apple. And from a weekly, tomorrow's close, let's see if it'll get itself back up and above our little blue line we have drawn in there. FAS 60-minute with the gap up turned into more or less a double bottoming formation here. Not quite confirmed yet, but still a good push up by the bulls with the gap up above these levels here. Allowed us to get into some higher levels. If we just flip to a daily, you can see where the consolidation had been between the 20 and the 50. Closed below it. Did not get a push below 30 for a short on today's charts. More aggressive. Could have got in right there above that 31 mark. Played that back up into about the 20. We didn't quite reach the 20 today, but I'd be watching for that. My breaks I still like are below 30 and above 33 on FAS. On FAZ, you can see the big consolidation is still continuing here on this particular chart, the 60-minute chart. And as we kind of wind our way sideways, looking for a move out and beyond, I'd be looking for this one below about 38 and above 42. Well, below 38 and above 42.50. That would be the most cautious trades you could make. If you want to get more aggressive, maybe above $40.50 maybe. That's pretty aggressive. Pretty aggressive. I would rather you wait for a different break, but that would be for those of you that are quick on the trigger with the day trading finger. And you can see, man, we got back above the 50. That was my time to maybe start looking seriously at this. And once again, here we go. It's just it isn't lost yet from a bull standpoint, guys. This is not completely lost yet, but we start breaking, once again 37, and it's off to the races probably for the Bears in this thing. Just can't seem to find its footing up here quite yet. So there are my entries. Pretty much now they really haven't changed from yesterday. So above this 50, below here for your entries long and short on FAZ. And that'll do it for today's video. I'll be back with you again with a week ending, market ending video tomorrow. We have broken these symmetrical triangles, and if we can stay above them coming into the end of tomorrow's trading, maybe the bulls do decide to take this a little bit higher. So be watching for that tomorrow morning, and we'll see you again, as always, tomorrow night. Bye.